the South Africa consumer is under huge pressure, and that has had a second order effect that many consumer facing businesses are under pressure. So if you look at financiers, if you look at the retail sector, and the retail sector is a great example, retail sales are only growing at about 3%, like for like growth in stores. And that is because the South African consumer is under so much pressure. So why is it that our business, our SA Taxi business, is able to prosper and grow profits? We've grown profits over the last few years at about 20%. And why is it? The reason is that the taxi industry is very resilient. And really what we've found is that if you look at the South African demographic, about 40% of our population uses public transport. The other 40% have private vehicles, and about 20% walk. And of the 40% that uses public transport, about 70% of that 40% rely on minibus taxi. Minibus taxi is the dominant form of public transport in South Africa because it is either the cheapest, the most accessible, or the most flexible. And because of this, consumers who are commuters are mainly using minibus taxi, and spend on commuting is non-discretionary. A commuter might not be buying a new shirt from a retailer, but he is going to work and back every day, and for that reason our taxi operators are doing well, and hence if they do well, we do well. So this is a structural element of South Africa. It's driven by the fact that the previous government did not build sufficient transport infrastructure to move our entire population around. Bus and rail is actually insufficient. It relies, newer forms of bus and rail relies on huge investment from government to build these modes of transport, as well as an ongoing subsidy, whereas the minibus taxi industry is unsubsidized, self-sufficient, very flexible and accessible, and hence that holds a dominant piece of the public transport industry. That dominance is actually growing over the last few years is what we found, and greater than population growth. So population growth is at 7%, the minibus taxi industry is growing at a greater percentage than that, and for all of these reasons minibus taxi operators are able to sustain this difficult environment, and so are we. The taxi industry protested against various participants in the minibus taxi industry. It wasn't focused on any single particular person. They protested against, by way of example, the OEMs for increasing prices of the cars too aggressively. The industry protested against government for not subsidizing minibus, by way of example. 44% of the subsidy goes towards bus, and the remainder goes towards rail, and they only move, those two modes of transport only move about 2 million commuters around per day, whereas minibus taxi moves about more than 15 million commuters around per day and only gets none of the subsidy. So they protested against government on that issue, as well as the fact that government hadn't brought funding into the minibus taxi industry. They protested against financiers and insurers, including us, either for not financing or else financing at rates and insuring at premiums that were too high, and even protested against fuel companies for not giving them a rebate in the fuel spend, and the industry spends about 5 billion rand a year on fuel levies. So it really is a protest against the fact that the industry is not participating in the value chain. All of the other participants, OEMs, financiers, fuel business, etc., is making a margin, and they felt that they weren't making sufficient margin. And what we did is we tried to, the minibus taxi industry is our client base, it's our most important constituency. So we tried to identify with their claims that were valid and engaged more immediately, and we always engage with the industry, but we intensified our engagement to allow us to try and deal with some of their concerns and to try and assist them. As I said, we intensified our engagement with them. Some of the responses were immediate responses, which created immediate relief for a taxi operator. By way of example, we agreed to not, on our loans that we originate, our highest interest rate can go all the way up to 28.5%. Government regulates that we can't charge more than about 34%. So we're well below the government cap, but it still is a high interest rate. And our interest rates are higher because, number one, we aren't a bank, so our funding cost is higher. But also we are financing a customer that would not get finance from a bank. So 9 out of 10 of our customers on average would battle to get finance from a bank, and for that reason the risk is higher and our rates are higher. What we agreed to with the industry was that on new loans going forward we wouldn't charge more than 26.5%. Of course what that will do is it might restrict our client base in that certain customers that previously could qualify for finance at a rate of, call it 28, now wouldn't. On average, our rate is much lower than that. Our average rate is 24.9. So, you know, going up to 28.5 is really kind of on the margin of our business. We did other things. We helped some of our taxi operators clear their names at the credit bureaus. We held a moratorium on repossessions for a certain period of time. And those were all initiatives that gave immediate benefit for the taxi operator. What's more important is that we identified certain areas, as I said, that we really sympathized with, and we have joined forces with the industry leadership to try and assist them in obtaining a better result for the industry. By way of example, we have engaged together with the industry leadership to talk to government to try and get capital to come into the taxi industry. A lot of our funding is raised from European or American development finance institutions, which are financed by those governments. And by the time you hedge those dollars or euros into rands, it becomes very expensive for us, and of course gets passed on to the client or makes our offering more expensive. And if government funded us at a cheaper rate, we could pass on that cheaper rate to the industry. So we've engaged together with the industry to try and attract cheaper government funding into the minibus taxi industry. And by virtue of the fact that they still do not receive a subsidy, we hope that that's an avenue where we can achieve a result for us and for the industry, and for the eventually for the commuter who's traveling in these minibus taxis. We are engaging with the OEMs to try and assist in keeping the price of the car as low as possible, and also stopping dealerships from adding on extras onto the car, things that really don't add value to the income producing capacity of the car, but increase the price, which then increases the installment, which then puts pressure on the taxi finance, the taxi business. So all of these type of engagements we are hoping to achieve as well. And the positive that's come out of the protest is that it's positioned us, it's allowed us to join forces with the industry to actually rally with them to get a result for the industry. So it's allowed us to show our commitment to the industry to make sure that the industry is a more sustainable industry going forward. 9 out of 10 of our customers typically would not qualify for funding from a bank. A bank would typically look at, number one, the credit scorecard of the individual, and that relies on their prior credit record. And of course, in our instance, many of our customers have got credit records, but they would be, retail credit, so credit from a retailer or perhaps a micro lender, and not asset-backed finance credit history. The other thing that the bank would look at would be, as I said, credit record, and then kind of the demographic of the taxi operator, and maybe they would look at the vehicle that is buying and what value they see in that vehicle. And credit metrics generally are driven by employment, and taxi operators are self-employed. They're SMEs, they're running their own business. So what we've had to do is to work out a way of establishing whether the business will be a good business. And what we really look at is, number one, the route. Is the prospective route that this taxi operator has a license to run going to generate sufficient income to cover the loan and then leave a nice, healthy, discretionary income for this operator and his family to live off? And we've got more data around routes and demographics and the cost of running a taxi business to know if a route will be profitable or not. So that's one of our lead indicators. Then we look at the taxi association that this taxi operator is a member of, which again is very important. Different associations have got different commuter densities. Different associations run better than others, which impacts that taxi business. We look at the car, which is very important, because if you think comparing to a bank will repossess a car. A taxi vehicle will have very high mileage and lots of damage on it, and they will auction that car and get a very low recovery. What we do is we repossess the car, and then we have the largest panel beater in Africa. In Africa, we are probably the largest buyer of spare part from Toyota in Africa, and probably the largest Toyota repair facility in South Africa. So we have the ability to, once we've repaired a car, repossessed a car, to repair and refurbish that car in its entirety, mechanical, panel and interior, put it into our dealership and sell the car for a much higher recovery. So we take a look at what type of a car it is, and we specialize on Toyota, Nissan and Mercedes. And then finally we have a scorecard on the individual. So the things that we look at and the things that a bank look at are completely different. In addition, a bank really just focuses on finance, where we focus on buying and selling the cars, financing the cars, insuring the cars, the data and the telematics and the tracking devices within the cars, which gives us lots of information, refurbishing the cars, and then recycling and reselling again.